Welcome back. Before we take a look at the day's business news, let's take a look at the stock indices across the GCC. And in our top business story, Emirates Airline is to scrap a daily service to a key air hub in the Philippines, 7 months after launching the route. A spokesperson for the airline was quoted in local reports as saying that Emirates will cease its daily flights to Clark International Airport from the 1st of May, following a review of its operations. The service to Clark International, located in the Greater Manila area, was the only long-haul route to be operated outside of the country's primary Ninoy Aquino International Airport in the capital. The company added they will continue to operate its 3 daily non-stop flights between Manila and Dubai and is taking all necessary steps to accommodate affected passengers on alternate flights. According to aviation experts at the Center for Asia-Pacific Aviation, too many carriers had entered the once lucrative market, with 24 flights per week added in the last quarter of 2014 alone. Following the announcement in November that Dubai will host the World Expo in 2020, the development of regional MICE infrastructure had been in focus at this year's GIBTM taking place in Abu Dhabi. The 3-day Gulf Incentive Business, Travel and Meetings show has put a spotlight onto the large investments and strategies towards the development of MICE infrastructure in the region anticipated over the coming years. The hosting of the expo is expected to deliver exposure for the UAE's tourism infrastructure and commercial facilities, with exponential growth in business events predicted in the neighbouring countries as well. Abu Dhabi has been a focal point for international events, with MICE sector currently generating 2.4 billion dirhams for the capital. According to Sultan Al-Dahiri, the acting executive director of tourism sector for the Abu Dhabi Tourism and Culture Authority, annual growth of 7% in business tourism is expected over the coming years.
We are developing a new 5-year strategy, and we are targeting to be one of the best 50 destinations in hosting events and conference and exhibitions, inshallah. So we're actively working on that, and we believe that business tourism is a key pillar in fostering and developing tourism sector in Abu Dhabi, and we can see the result is very obvious. We've been very active lately in developing the social media in different types: Instagram, Twitter, Facebook, and the others. What we do is we came up with this hashtag, and we are encouraging people, individuals, to take pictures of Abu Dhabi. So what happens is, once we gather all these pictures, we have, as you see, this application, this device, which goes with us in every exhibition we participate in, and we show the best picture we selected from individuals based on this hashtag.
Additionally, neighbouring countries such as Oman have also paid much attention to capitalise on the expected increase of business tourism in the region. Among the developments to position the country as a leading MICE destination, the projects to be developed include the $1.8 billion Oman Convention and Exhibition Centre in Muscat, which is expected to be launched by late 2016.
We have to be with the base, to keep with the base. You know, it's growing. The announcement, we were very happy to be announced that Dubai will host Expo 2020. So we should be preparing for that, and we are doing that, to be honest. There are a lot of big projects coming to Oman to cater and the expected numbers of tourists that will visit Dubai during that event, actually. That's why we have a very big cooperation with our neighbors here in UAE in different types of changing, like visitors, and we have like a joint visa with Dubai and Qatar also. Now Oman is growing very high in this type of tourism, business and incentive. We came to an idea that we should have our own convention center, okay? The announcement of it last year is a very big impact to Oman itself, in knowing that Oman can carry on this type of tourism.
Higher yielding assets sold off in the past week, following a more hawkish than expected FOMC rate decision. Fed Chairman Janet Yellen continued with a $10 billion monthly taper, taking the total program down to a revised $55 billion. But it was her comments with regards to future interest rates which kept markets on the back foot. To talk more about this and the week ahead, we earlier spoke to Gaurav Kashyap, the head of futures at Al Pari Middle East.
Well, we saw the US dollar close last week on the front foot following a rather hawkish FOMC rate decision in which Fed Chairman Janet Yellen basically gave a timeline as to how they would be increasing interest rates for the US economy over the course of 2014 and 2015. Now, although we're not expecting any rate hikes in 2014 with a target of 1% by the end of 2015, the overall hawkish nature of the FOMC is what led to a lot of the gains in the US dollar in trading last week. We saw higher yielding assets, including the euro and the yen, the euro and the British pound dropping against the US dollar. Of course, gold was also a little bit higher on the news, but we've seen gold open the week on the back foot, currently finding support at 1320 levels. If we see a break of 1320, we can expect the precious metal to test 1305 levels. But overall, the trend remains bullish for for gold in the week ahead. Overall, if we look at the Indian rupee has come through a nice bout of a bullish momentum. We expect the pair to probably test 60 to 60.25 against the US dollar. On DGCX, that equates to 166 to 166.50 in the week ahead. Overall, the prospects remain quite bullish as improving political developments from India are continuing to improve risk sentiments in those markets. Once again, we saw the Sensex hit record highs last week, and we can expect more of those gains in equity markets in the week ahead. Overall, we have some US GDP reading reports which should improve risk sentiment. Overall, the euro should probably test 137 in the week ahead, with the British pound trading between 163.70 and 165.40 in the week ahead.